On June 12, 2026, something historic happened. Not in space, on Wall Street. A company that builds rockets raised $75 billion in a single day, the largest IPO in the history of human civilization. The stock jumped 19% on its first day of trading. The CEO became the world's first trillionaire, and in living rooms, trading floors, and Reddit threads around the world, everyone was asking the same question. Is this the next Amazon or the next dot-com disaster? Let's start with the cold, hard numbers. SpaceX went public at $135 per share. That gave the company a market cap of $1.7 to $5 trillion. To put that in perspective, SpaceX now trades at nearly 138 times its annual revenue. 138 times. When Google went public, it traded at 10 times revenue and it was growing 240% per year. When Meta debuted, it was at 28 times revenue with 88% growth. SpaceX? 33% revenue growth, 138 times sales. And here's the kicker. In fiscal 2025, SpaceX did not make a profit. It lost nearly $5 billion. The year before, it actually made money $791 million in profit. What happened? One word: AI. In February 2026, SpaceX acquired Elon Musk's artificial intelligence startup xAI, and with it came Grok, data centers, and a staggering cash burn. Out of SpaceX's nearly $21 billion in capital expenditure last year, $12.7 billion went to building AI data centers, more than the company spent building rockets or satellites. SpaceX's AI division generated $3.2 billion in revenue in 2025, but it lost $6.3 to $6 billion doing it. So the company that was once celebrated for revolutionizing space travel is now fundamentally an AI bet, and investors are pricing it like it's going to win. Now, before we call this a bubble, let's be fair. There is a real business underneath the hype. Starlink, SpaceX's satellite internet service, is genuinely impressive. It generated $11.4 billion in revenue in 2025, with a 63% adjusted EBITDA margin. As of March 2026, Starlink had over 10.3 million subscribers across 164 countries. More than 21 million airline passengers used it last year. Over 150,000 boats and ships. Around 1,400 commercial aircraft. And SpaceX isn't stopping there. It's launching a satellite-to-phone service that could reach 1.9 billion people without a dish, without a router, just their existing smartphone. If that works, Starlink stops being a niche internet service. It becomes the backbone of global mobile connectivity. Then there's Starship, the most powerful rocket ever built, which SpaceX says will carry 100 metric tons into orbit. And the government contracts. The NASA Moon Program. The Department of Defense relationships. The bull case says, this is not a stock, it's a bet on the infrastructure of the next century. But the bears have a very different story to tell. Morningstar, one of the most respected names in investment research values. SpaceX, at $62 per share. The stock is trading at $185. That's a 300% overvaluation by their math. CFRA initiated coverage with a sell rating and a 12-month target of $115. That's nearly a 30% drop from current levels. Here's the specific problem. SpaceX's Sohn filing its IPO prospectus claims a total addressable market of $28.5 trillion. That's roughly the size of the entire US economy. $22.7 trillion of that comes from enterprise AI applications. But here's the thing, the entire existing enterprise software market is less than $1 trillion. SpaceX is claiming a TAM 30 times larger than the market that exists today. Its intrinsic value, bears say, is around $22 per share, not $185. We've seen this kind of story before. The tulip mania of 1637. Prices for single tulip bulbs exceeded what a craftsman earned in 10 years. Then, overnight, the market collapsed. The South Sea Company, 1720. Shares rose 900% on promises of trade monopolies that never materialized. The railway mania of the 1840s. Investors poured money into rail lines that would never be built, chasing a future that was real but priced at pure fantasy. The dot-com bubble, the year 2000. Companies with no revenue, no profit, no business model valued in the billions. Then the Nasdaq lost nearly 80% of its value. The pattern is always the same. A genuinely transformative technology appears. The narrative outpaces the numbers. Retail investors flood in, terrified of missing out. Smart money quietly exits. And then the air goes out. There is one element to this story that is unlike any bubble in history. Elon Musk. As chairman, CEO, and CTO of SpaceX, Musk controls 85% of the voting power. He cannot be fired without his own consent. That's not normal corporate governance. That's a monarchy. Musk also runs Tesla, XAI, now folded into SpaceX, and the social media platform X. The question isn't just whether SpaceX can execute. The question is whether one human being can manage a $2 trillion aerospace company, an AI division, and everything else simultaneously. And there's something else. Musk made 30% of IPO shares available to retail investors through Robinhood, Charles Schwab, and Fidelity. That's 2 to 6 times the typical allocation for retail buyers. One analyst put it bluntly, the only way SpaceX reaches this valuation is if it becomes a meme stock. And so far, the retail army has delivered. The stock hit an all-time high of $225.64 just 4 days after the IPO, before falling back sharply. If you're thinking about investing or just trying to understand what's at stake, here's the risk register. Risk 1. Starship. The whole valuation story rests on Starship becoming reliable. NASA's Inspector General has already warned that SpaceX's moon lander won't be ready for its targeted June 2027 landing. If Starship is delayed, a major pillar of the bull case cracks. Risk 2. AI cash burn. The AI division lost $6.3 to $6 billion in 2025 while consuming most of the company's capital expenditure. That is not a business. That is a bonfire of cash with a hope attached. Risk 3. Starlink competition. Amazon's Kuiper constellation is coming, terrestrial fiber is expanding, and Starlink's average revenue per user has been declining. Risk 4. Valuation math. To justify a $2 trillion valuation, SpaceX needs to grow into something almost without precedent. Musk himself said the company might reach approximately $1 trillion in revenue by 2030. That would be a 50 times increase in 5 years. Risk 5. The lockup cliff. When the lockup period expires, likely in December 2026, billions of dollars in insider shares become eligible for sale. That wall of supply could be devastating for the stock price. Risk 6. One-man dependency. What is SpaceX without Musk? No governance structure, no succession plan. The company's prospectus itself lists key person risk as a material concern. So, is SpaceX the biggest bubble in history?